Welcome to this special budget episode from Outlook Money. So, one of the major things that people look for in the budget are changes to personal taxation. And today, Finance Minister Nirmala Sitharaman had a lot in her bag. She wowed taxpayers by, adding five big tax relief measures, and this was especially welcomed as last year individual taxpayers had nothing to look forward in the budget really. So, to understand how these measures will affect individual taxpayers, we have with us Aarti Rawat, partner Deloitte India, in conversation with me, Nidhi Sinha, editor Outlook Money. So, Aarti, getting into the conversation right away, how does the salaried and middle class do you think will benefit from the budget announcement? There were so many changes in the new tax regime that the FM announced.
Yes, Nidhi. After a lull for the last 2 years, this is really great to hear so much from the finance minister, and everybody was getting, very anxious because she kept the direct tax proposals to the last, and then personal taxation to the last. So
right. In fact, she mentioned that I'm coming to the section which everybody waits for. So that was quite interesting.
Absolutely. I think. It's nice of her to create that kind of anxiety for everybody, and I think it's a very smart budget. Very honestly, Nidhi, what has happened is, if you see the press reports from from the last whole month or a couple of months earlier, there was a lot of ask saying reduce the tax rates, cut my give me some more money in my hands. Increase the ATC deduction, give me a housing loan benefit, this and that and all that. But I think she's done a very great balancing act. First and foremost, all the changes that have happened are only for the new tax regime. Nothing has been done for the regular tax regime. So the message on the wall is really clear, saying that I want to take this as a direction. And this is how I want to go. So if you're willing to forego of your deductions and exemptions, I'm giving you a better tax rate. I'm giving you higher income slabs. I am even changing the surcharge at the highest rate, which was affecting HNI severely. I'm changing that. I'm giving you all this, but don't ask me for small deductions and exemptions. So. And this comes at after a lot of study. The finance minister was very cognizant of the fact that though the simplified tax regime has been there for the last couple of years, there has been not a tremendous response to that. Very few cases. So which is where it was very necessary to do a analysis as to what is going to sway the taxpayers. And I think that the kind of benefits that are provided now, and I'll come to in a bit to what are the changes, but whatever the tax provisions that are proposed now, I think that will have a tremendous impact on at least, if not all, a major section of society. Right. So first and foremost, it's the first change, which is there. It starts with the low income group. Right. So the low income group enjoyed a tax exemption under the current law of up to 5 lakhs. Now, this has been increased to 7 lakhs, but only for the new tax regime, not for the regular tax regime. So if you are under the new tax regime, and if your income is going to be less than 7 lakhs, then in that case, you have to pay zero taxes.
Right.
If I have to give you an example, under the current tax regime, if I would compute my taxes under the regular tax regime, I would have to pay 54,600 as taxes. Okay. If I chose the simplified tax regime, which is currently existing, I would have to pay a tax of 33,800. But now I have to pay zero taxes. So that's a big difference for somebody who had to, take out 30,000 from his pocket and pay off, as compared to a situation where I have to pay zero tax. So this is for the lower income. Then we go to the normal assessees who may be having varying incomes, And for all these taxpayers, there's going to be a tax reduction because the slab rates as well as the tax rates under the simplified tax regime have undergone a change. So earlier there were something like 6-7 slabs, income slabs, which were there, and there would be a 5% incremental tax which is levied from 5 to 10 to 15 to 20 to 25 to 30. But now that has changed to only 6 slabs. So if we compare the impact of this, and this is on a very ignoring everything else, then if a person is earning 15 lakhs of income, right, and he would pay something like 2,62,000 under a regular tax regime, which is as per the provisions today. And under the same thing, under the simplified tax regime, he would pay 1,87,500. So he had a 75,000 benefit was from the regular tax regime to the simplified tax regime. Right. And now with the proposed rates, he is going to only pay 1,50,000. So this change, which is there, where he's saving much more again, is a welcome change for a person earning say 15 lakhs or so. But when you and this goes on, I mean 15 lakhs, 30 lakhs, there's surcharge and all that will be added. But if you look at a high net worth individual who is earning, let's say, 6 crores, okay, for him, the surcharge rate which he would have to pay was 37%. Now that surcharge rate has been brought down to 25% under the new tax regime again. So if this individual goes and selects the regular tax regime, he will be stuck to the rates of 30% plus regular surcharge and everything like that. But if he is under the new tax regime, then he would at least save something to the tune of 20 or 23 lakhs. Because 25% to 37% is applied on the whole income slabs, all the income slabs. It's not incremental as surcharge. So it's a huge chunk of saving to him.
Yeah. So, but you're talking about the low income and the high income, but you think the mid income, because in the old tax regime, there were also reductions and exemptions that kind of, saved your money. In fact, we did that calculation with Deloitte itself last year, and we had certain, not all, of course, low income was a new tax regime was beneficial for the low income it is beneficial for the low income group in the present system also for FY23. But somewhere in the middle, that thing used to go where old tax regime used to be kind of more beneficial because of the reductions and exemptions that you would avail. So do you think that this kind of change will also have an impact on that section?
Yes, of course. So Nidhi, you're absolutely right. In the past, the regular tax regime was favored by a lot of people because of the deductions and exemptions that were there. And that's the reason where, you saw only 10 to 15% of the people really went in for the new tax regime in the past. Now, going forward, the dynamics changes a bit, where you have certain kind of tax slabs and rates which are monitored, which kind of sways certain kind of, at least a part of the population, if not everybody, to the new tax regime. Because now, to a certain extent, I would say the gap has been bridged to make sure that you are at least nearby to that. Having said this, I will be honest with you. See, whatever are the deductions and exemptions, they are not one-time deductions and exemptions. They are not like an infrastructure bond, which you make a deduction for that year, and then it's not necessary that you continue the year later. Those were long-term deductions. Like, for example, if I purchase a house, I'm going to get that income deduction on housing loan for several years. The interest on that would be paid. There would be a pre-construction interest also. And all of that was available to me for payment because the loans will generally be for 10 to 15 years. Similarly, if I say Provident Fund, employer contribution to Provident Fund happened earlier also, and it's going to continue to happen. Person will have to contribute towards the Provident Fund, and he will get a tax break under the regular tax regime, which he will have to forego under the new tax regime. Right?
Right.
Similarly, LIC policies, NPS, you name it. All of these are very, very long-term investments. You can't come out of it all of a sudden because today you don't have a tax break.
Right.
So going forward, what I would say is that while everybody might not move to new tax regime because it may not suit them and it may not turn out to be beneficial, but there will be still some people who will prefer to move because now this regime really looks to be promising, I would say, with the tax exemptions and the rates.
Okay, right. You have a point. In fact, for a lot of mid-income people, EPF and your housing loan are expenses and investments that kind of cover the ATC reduction, which is at 1.5 lakh. And a lot of them do not actually need to make any other investment to get this reduction because 1.5 lakh is easily covered for a large section of people. So I get that point that this section may like to or may prefer to continue in the old tax regime because there is nothing extra that is going in terms of getting that reduction benefit. So that is definitely there. But what do you think? What is it that why is this renewed focus on the new tax regime? Because one fact from a personal finance point of view, Outlook Money has this concern for its readers also, is that a lot of though savings culture has increased in the country, especially after COVID, etc. For a large number of people, savings largely meant tax saving in the sense that of course, that was not the ideal situation where, obviously you should not just save to save taxes, but also for your overall financial well-being, etc. But the fact remains that a lot of people who were not into the savings culture still save because, they thought that, okay, I'll get some benefit out of it. So that kind of gets, and especially for the new employees, people in the low income group, they would still, save something, not that taxes I mean, of course, it's good news for them that there is no tax to pay. But somewhere also, I'm just playing the devil's advocate here that there was an incentive to invest in something. There were mutual funds were coming up with ELSS schemes. We have our traditional investments, of course, that come under the ATC basket. All that will get affected somewhere. So it's a fine balance as I see it. But how do you see it? Why is the government focusing on this new tax regime? Is it just to reduce taxes, or what do you think is the thinking behind it? How does one rationalize it?
No, there is a detailed, a very deep thought process on why new tax regime is really, proposed by the government and why there is so much focus on it. It is basically that what happens in the new tax regime? You have to pay taxes on the total income. There are no deductions or exemptions that are provided to you. What happens with these deductions and exemptions? There is a whole machinery which is deployed just to make sure that you're claiming the rightful deduction. For example, you as an individual will have to make sure that you're declaring the amounts to the employer. Then you will have to invest in time. You will have to provide those receipts to the employer. The employer will have to verify it. There is so much of angst and back and forth that happens on why you are not allowing me this, why is this not correct? The agent told me that this investment is there for ATC. You are wrong, I am wrong. All of those discussions.
Right. Compliance definitely goes down.
Proofs get accepted. Sometimes and again, the employer will have their own thought process, their own tax positions. They will have to collect these things, give the tax breaks, declare it in their TDS returns. They have to retain these documents to make sure that they are available whenever there is a TDS scrutiny. At the time of TDS scrutiny, they will produce it before the tax officer. If the tax officer does not agree to the position, then the employer is treated as a SSC in default and the recovery is made against the employer. Because obviously it's easy to collect taxes for all employees from the employer rather than to run after each employee. So that whole investment in time and effort for the employee, the employer, as well as the tax administrator, all of that creates this whole pile up within the system which needs to be eased up. So that is one perspective. The second thing, what you rightfully said, that there was a discipline that I will save money for future. And all of these, your PPF, LIC, name it, all these are what I would say investments taken for old age, to cover some risk, to make sure you have a pot full of money when you can't earn. And all of this is there. Plus, there's a other part of it is that these have a lock-in period. So all this money gets invested into the infrastructure and any kind of capex investments which the government really needs to fund for a long-term time. So it's a kind of a double advantageous position for everybody. But having said that, what I would say is that more and more people are getting out of this mentality that, okay, I have my limit of 1,50,000, so I will save towards that. Okay, my PF takes care of about 90,000, then I will invest only 60,000, that kind of thing. I would not deny, Nidhi, there is a huge mass of population which still does this calculation and does only to the extent required. But more and more people are getting into different types of instruments which are not even covered by ATC.
True.
And the reason for that is investment today is made so easy. It's there on your phones. It's pushed to you by your apps. So the inclination and the attraction to invest and play into the stock market is pretty high, right? While yes, it may not be comforting to know that sometimes your NAV could be zero, but you can't please everybody. So there is a thought process for the simplified tax regime and why the government has been doing this and pushing it in this manner. While all of us knew this was eventually the goal of the government, but to a certain extent with this budget, the finance minister seems to have expedited the process by saying no reliefs for the regular tax regime, everything for the simplified tax regime.
Right,
so the clear cut and stark kind of difference is evident.
Yeah. It's very evident. Out of the 5 announcements that has happened on personal taxation, 4 were for the new tax regime. 5th was something else about leave encashment, etc. So it doesn't really matter which tax regime you are into for that. So it was clearly focused on the new tax regime. And my sense is that, and as well as yours, is that more and more people will go towards it. And clearly taxpayers have to now make a kind of, they have to choose between less compliance and or they have to recalculate their tax liability and expenses to kind of decide which one they should stick with.
So Nidhi, for that, many employers, as well as the income tax department itself, has a tax simulator whereby you can put in your details and you get a comparison of the taxes under the regular tax regime and the simplified tax regime, and you can compare and choose what is favorable to you. And actually, it's an advantage for the salaried class because they can declare declare to the employer that they want to opt for a certain tax regime, and while filing the return, they can change it. So they have a flexibility of making a change as and when required. So they are in a very advantageous position. So they should avail of the tax stimulators which are available and make sure that they adopt something that is beneficial to them. And it is just for that year. So next year you can go ahead and change it. The only difference that people have to note now is that the simplified tax regime becomes the default option. Which means that if they don't really go and exercise their option or tell the employer that you adopt the regular tax regime for me, the employer will actually not, give any deductions, exemptions, and compute the taxes basis the simplified tax regime. So that is something that they really need to be aware of.
Yeah. So definitely coming to the end of this session for our readers and viewers, basically it's time to choose the next financial year. Of course, we are in FY23, so this doesn't apply to the taxes that we are paying for FY23, but from April onwards, when we start planning for our taxes for next year, these are the things that are very important to keep in mind. Whether you want to stick to the new tax regime, then you don't have to say anything to your employer. But if you think old tax regime is something that works for you, you will definitely have to intimate the employer accordingly. And like Aarti said, that you could go to the income tax website to make that comparison. The other place that you could come to make that comparison is the next Outlook Money issue, not the February Outlook Money issue, where along with Deloitte, we are showing detailed calculations on what really works for you. We are comparing the new and the old tax regimes as we go forward into the new financial year after 2 months. And that's the really big takeaway for the budget in terms of your choice between the new and the old tax regimes. So get ready to calculate your tax liabilities under both the regimes. See if you want to go through all that compliance that the old tax regime entails, and make a decision accordingly. So on that note, thank you so much, Aarti, for being with us and giving us that clarity. Much needed clarity. Everybody, like the FM said, everybody needs clarity and waits for this piece on personal taxation. And that is what you have done for us today. So
Thank
thanks
you,
a lot.
Nidhi. Pleasure talking to you.
That's all for now, viewers. Thank you and see you again.